Yeah, I'm happy to do that. Appreciate everybody jumping on here right now. Sorry if everything starts making noise in here. I hope there's a lot of small business owners in here that need some answers. That's kind of the purpose of this seminar in the first place. Garrick Sams in here from BMSS, and Nick, you're gonna have to tell me, is it Rockhill is the last name?
That's correct.
Okay. Progress Bank, right?
That's right.
Okay. So both of these guys are in the mix for the SBA's PPP and the EIDL in different ways, right? Nick is a banker, so he's getting the guidance directly down from SBA and how they're going to help actually lend this money out. This is coming kind of from SBA and then through local banks. And then Garrick is on the other side helping facilitate a lot of the paperwork and some of the other things that you may need as a small business owner in order to submit this application, payroll information and things such as that that you may need to qualify. And so these guys are just going to give a little bit of the ins and outs on what you need to know, what you need to have to submit, how you need to go about submitting, what this means for your business, and then kind of what that will look like on a scale of forgiveness. That term has been thrown around a lot in the media over the last several weeks here, and largely still, there's a little bit of scrutiny on what that really means. But I won't throw a lot of details out there. I'll let these guys do the explaining because they're the experts on it. So Garrick and Nick, if you guys want to go ahead into this and kind of explain the programs and how anyone would start the application process and what that looks like.
Yeah, Matt. Thanks, man. Well, I think Nick Rockhill over there at Progress Bank. Progress Bank is one of the. He's always. Nick actually called me about this when it first came out. So since a lot of this revolves around, the loan and banking side, I'm gonna let Nick kind of kick us off and really get us started on, kind of the different, how do you start this process?
Sure. Thanks, Garrett. So obviously there's two main programs that folks are kind of and applying for at the moment. You have the EIDL program, which is the Economic Injury Disaster Loan. And then you obviously have the PPP loan, Paycheck Protection Program, which is where the banks are actually coming in. So I'm going to kind of start with the economic disaster loan first, in that we're not as involved with that. So I'm just going to kind of tell you how you go about applying for it, kind of what the benefits are of it, and then I'll kind of go into where we play more of a role with our clients and other individuals or businesses. So with the economic injury disaster loan, you have to apply for that directly through SBA. So you'll go to sba.gov. There's some tabs and things that it's pretty easy to go in and find it. It's not very hard. I think you can even go directly to it. I think it's sba.gov/disaster. But you have to go in and you apply for that directly. My understanding is it's a fairly easy, readable process to go through. The advantage of it is there is a $10,000 grant that is forgivable with it. But one thing to understand on it is that it is an actual loan. The rate, I think, right now is about 3.75 to 4%. And I think they will amortize it up to, I believe it's 10 years. And you can get a loan amount up to $2 million with that program. It's virtually a loan that you're going to be paying back over a period of time. I don't know the underwriting process. I don't know how they figure out what the exact amount is as far as what you qualify for. But my understanding is you go in and you apply for it through SBA, and it's pretty self-explanatory to walk you through. With the Paycheck Protection Program, which is where we kind of have been more involved and what we have been studying more, because we are having to help our clients kind of process these. You will go to your lender or your banker. If you don't have one, I encourage you to find one. There's a lot of local banks here in town, or you can go to an SBA preferred lender is what they call it. in that a lot of the community banks are probably going to be working with a third-party SBA partner of some sort, whether it's a company, there's a company called Capital Solutions, Assurance Capital, some of these others. Now, some of the community banks will be in a position where they can process these directly themselves, like the large banks. But first and foremost, I encourage you to find a lender. I mean, that's going to be your number one priority. They're going to be able to help you, walk you through this. There's a 1 to 2 page loan application that you can pull from the SBA website, or if you are working with a banker, they should be able to provide it to you. It's pretty easy to fill out. The way you figure your loan amount is based off of your average monthly payroll for the last 12 months. You have to have been in business as of February 15th of this year. If you have not had 12 months worth of payroll, they are asking to take the first 2 months of the year, so January and February, divide that out to come up with an average monthly payroll, and you will do a 2.5 multiplier. So an example would be, you go and you calculate it out based on your financials. You get, let's say it's $50,000, and you would add a 2.5 multiplier to that. If it's, and it's pretty easy. That's basically all that you got to go in and do. Now, the kicker is you have to have documentation showing how you came up with that calculation. So we, as the bank, we have not really been given any definitive guideline as to what they want for the underwriting process per se. There is no personal guarantees on this. It's all done through your LLC, your corporation, whoever. It's considered what we call in the banking world a non-recourse loan, and there's no collateral required, so it's virtually unsecured. Now, it's not unsecured to the bank. It's 100% guaranteed by SBA, so there should be no risk to the bank as far as what we understand it, at least the forgivable portion. And I'll get to that in just a second. But kind of going back to the documentation, one document that we've been kind of asking our clients to provide, which Garrett can allude to here shortly and kind of tell you exactly what that is what's called a W-3, transmittal of wages and taxes statement. There's also a 941 form, I believe. Garrett, you can correct me if I'm wrong. I believe that's the form
right.
that's called. And then, because we've not been given any definitive guidelines, we've gone ahead and asked our clients to present us with at least an end of year P&L and balance sheet. And if their taxes have been done, their 2019 tax return, we're just asking for the business return only. You can include 1099 contract employees, so it does not just have to be payroll employees. So if you have 1099 contracted employees, you can include them. But that's really kind of what we're asking for right now. We believe in the method that if we have too much, it's better than too little, particularly if we get to going and processing these things, which I'm going to be quite honest with you. We really don't have any particular guidance on how that process is going to work. And we're supposed to be live on processing these tomorrow. But I think they're still trying to work that out, and hopefully we have some definitive guidelines and processes of exactly how that's going to work. As many of you know, with the Paycheck Protection Program, you've probably heard the word forgivable. I think that term is probably being used very loosely, and that they are going to require that you supply proper documentation in order for that to be forgiven, and you have to meet certain guidelines and standards in order for that loan amount to be fully forgiven. My understanding is you will have an 8-week period to which you can use your loan proceeds for, and you will have to show documentation that you've used it specifically for payroll, rent, mortgage interest, or utilities. Utilities can include your telephone, electricity, internet, things of that nature. But you have to also retain all of your employees. Should you have multiple employees, you have to retain your people and show and document that it's been used for payroll purposes. Also, my understanding is that 75% of it has to be used for payroll. The other 25% can be used for those non-payroll costs, and you have to show this after an 8-week period. If you use it for other expenses, that portion will be unforgivable and will be termed out, as we've been told now, and it's been updated recently, up to 2 years, over a 2-year period at a rate of 1% for anything $350,000 or less. I think it goes to 0.5 over 350,000, and the next increment was sorry, I'm looking at my notes. Well, I think the next one was 0%, but there was the next cap I want to say is like over $1 million or $2 million, something like that. But anyway, I'm gonna kind of stop talking for a second and open the floor for questions, because I know I probably filled you with information and/or allowed Garrett to kind of talk about some of the documents that maybe I'm referring to that maybe you're not as familiar with. But what questions do you have right now on the front end, just from what I've kind of told you on the front end processes of what's available right now?
Nick,
Yeah,
Nick, a couple things. Oh, go ahead.
Yeah, go ahead. Oh, well, I was just saying, I saw a question about, sole proprietors. I mean, this group probably has a large majority of, a sole proprietor, an individual that's, going to be self-employed, maybe that doesn't have any payroll that's working for them. Maybe that, that's their only avenue. So, I mean, for the sole proprietor, would you agree that, they're going to be looking at that Schedule C on their tax return and using that self-employment income? That's kind of the, we talked more about, businesses with payroll, but, if you don't have payroll or something of that nature, would you say that the bank would look at, that Schedule C for self-employment income? And, this payroll is only limited to 100,000, per person, which, in these times is, let's take that with a grain of salt. But, if you're self-employed, you can use that Schedule C as self-employment income and then maybe go off of that. Have you seen anything kind of guidelines with that, Nick?
That's correct. Yeah. So if you're a sole proprietor and you do not have any employees, typically what the bank is probably more than likely going to look at is the Schedule C, and take an average of that over the 12 months, and then again do that 2.5 multiplier for that.
So I had if you're done, Garrett?
Yeah, I'm good.
I had another question that I feel like some people may be wondering, and are these loans subject to any personal credit checks? Are they, I know you said that there's not collateral on the line, but are they subject to any personal credit checks, or is this one of those things where if they have been in business, they can showcase the revenue, they can showcase the payroll, then they should go to move forward with this loan? And then on the you did discuss the forgivable aspects, and it's my understanding that can you clarify the time period there, and then what specifically they can be used for? It was utilities, rent, mortgage interest for the business, and then payroll. And I believe it's it has to be at least 75% payroll. Is that correct?
Yes, that's correct. And I'm sorry, Matt, are you done?
Sorry, I was just throwing a couple questions out for you just to make sure it was clear.
Yeah, so the first one that you had mentioned about the credit checks and things like that. So again, this is what we refer to in the banking world as a non-recourse loan. So there are no there's no personal credit checks. We don't ask for personal financials of any kind, anything like that. Obviously, I know if you're a sole proprietor, you obviously would be giving us your personal tax return. However, you do not have to give us the whole personal tax return. You can just provide the Schedule C, as Garrett had mentioned, portion of the tax return. But there is no, this is solely dependent on the business. It's in the business name. We do not do any personal credit checks or anything like that, to answer that question. And what was the other question that you had alluded to?
Just trying to clarify that what all this can in fact be used for. And you mentioned that you're going to have to showcase after the fact. And I asked Garrick this the other day. How are they going to verify all of these transactions, and what, more specifically, what is that time period in which you're required to, I guess, spend this money that can be forgiven?
Sure, that's right. So you have an 8-week time frame that you have to show documentation for these expenses and what you've used them for. Again, that's a gray area that hasn't completed what they're going to require as documentation of showing this. One thing, a couple things that we've recommended to our clients were, either keep a spreadsheet of it through Excel. Another is, it's a pain, but if you wanted to run a separate account, open up a separate account and run, the funds go to that account from this loan, and you run all your transactions and things strictly from that account, so you can pull your bank statements just showing that. If you don't aggressively use your current existing account, or you maybe have, a lot of people have an operating account and they might have a payroll account. Some people will just utilize that payroll account to account for documentation on this. Those are a couple methods that I would recommend, but we haven't really been given any definitive guidelines as to what they're going to require as documentation showing that that's what the funds have been used for. We've just been told that the client is going to have to show that that's what the proceeds were used for within an 8-week period. After that 8 weeks, there is an additional 4 months, so you have 6-month period to where you will not have any payments that you have to make. After 180 days or 6 months, we basically go in, and then that's when the loan will be turned to 2 years at a rate of 1%. And there is no prepayment penalty on that, so you could pay it off sooner than that if there is an unforgivable portion.
That's good advice.
Did that answer your question?
Yeah, that's great. And the other question, Molly was mentioning there in the chat that the 8-week period can be any time between these dates. Was it my understanding that the 8-week period, though, the time clock begins at the date of origination of the loan?
That's correct. The day that you received approval and that the loan proceeds are distributed.
And how long is that approval process, Nick? I mean, I've never seen the SBA act really quickly on anything, so.
Yeah, not speaking bad about them. They do a good job, and I feel a lot of good things.
Oh, they really do.
We haven't really been given again, and that's why the banks kind of were pushing today, saying, hey, listen, you guys want us to go on out and process these things as of tomorrow, but they really have not indicated anything to the banks, a processing guideline or anything like that. And so we're almost kind of like wading in the water, trying to hold our head above water, trying to just figure out exactly how they want this to work or how it's going to work. We haven't really been given a definitive timeline. Now, my understanding is it's supposed to be very quick. Once SBA approves it, the bank can release funds and they would be available immediately. As far as the process, when the bank provides it to SBA or processes it through the programs that we have to SBA, I can't tell you what the turnaround time is in which SBA will approve it, because I'm just being honest, they haven't given us any indication of what that timeline is like.
Yeah.
I have a quick question. You had mentioned that, using the Schedule C for sole proprietors who I have payroll, but I also have obviously myself. When it comes back to the end of this, when we're doing the forgiveness piece, we can obviously prove kind of the amount we payroll someone else, but from a actual like our payroll perspective, normally that's, our Schedule C is determined by net profit, but that's obviously going to be impacted over this period of time. So how do you anticipate them doing the forgiveness piece if you are using like a sole proprietor payroll, quoting payroll? Right.
Do you pay yourself like a distribution or write yourself out of the company a check or anything? Or?
Well, as a sole proprietor LLC, I mean, I basically transfer money from my business account to my personal account. It's you know what I mean? It's not like debt necessarily.
Right. So I would use your bank statements at that point showing that transfer. That's the way I understand it. Okay. And that's the way we've kind of been presented it. But that's what I would recommend at this juncture.
Okay.
And a lot of those rules revolving around, the documentation piece of that haven't been released yet. So, I mean, we're really, playing with a playbook that has a few sheets missing out of it. So, I mean, Nick is doing the best he can on his end, trying to, if we, I mean, if you told me and Matt McClellan, hey, how do you calculate net income? I see it one way and he's going to see it a totally different way. And then, you got to look at it by month. I mean, how are you going to do that for, let's just say you maintain a little bit of inventory that totally expired and went bad. I mean, are you going to show just a huge loss in 1 month? I mean, there's just a lot of questions that we don't have. And Nick is right. I mean, that might be a way to show that, but it's probably a follow-up and saying, hey, okay, we know we've got a big, self-employed audience here. We could probably send something out that says, hey, this is how you can show this. And that's mainly going to be on the, SBA compliance side. Because we're all going to have to pay the piper at some point and show, the SBA that, hey, we did spend this money within 8 weeks. But, this is kind of, hey, this is what we know so far, but yeah.
And
so I have a question about the amount, amount of the loan. So when you say it's 2.5 times payroll, is it 2.5 times 8 weeks of payroll or 2.5 times like 1 month of payroll?
So that really gets into this calculation we're calling average monthly payroll. And what that includes is going to be, salaries, potentially independent contractors, health insurance, retirement plan, potentially workers' comp. And so we don't really know what that total is going to be yet. We don't have exact. We've got kind of what around it should be. And I use a common sense approach. What does it cost to get your payroll out of the door? Your employer piece. But then the average monthly payroll is looking over it from a historical 12 months and saying, what is your average per month in that monthly payroll? And then multiplying that average times 2.5%. Now, like Nick said, if you haven't been in business for, 6 months, you could take the first 2 months of 2020 and potentially use that. And then, you multiply that, divide that by 2. But really, I think what the key here is, they don't really want to just have, I think the key is what you're actually going to spend. So, if you could prove that you're going to spend that in 8 weeks, that's probably where this is heading. Is that right, Nick?
Yeah, I mean, that's kind of where it's going. And look, some people are finding when you start talking about the PPP program, specifically even a lot of sole proprietors that I talk to, they find that maybe the economic disaster loan is a better fit for them just based on the way the calculation method is. And they might be able to get a little bit more money out of the economic injury disaster loan. You know, I was working with one of my clients and we were figuring out their payroll. Well, it came out to be that they would be approved for like $9,000. Well, they could go and apply for the the disaster loan and get an immediate advance of $10,000 on the front end, and it wound up being a better fit for them. And again, that's done directly through SBA, but you know, I guess you kind of have to find what fits for you. But as far as the payroll loan goes, Garrick is correct. You know, it's going to be based off of your average monthly over a 12-month period, and for some folks that just may not be sufficient enough when you calculate it out.
And then it's an either or situation. You can apply for one or the other.
So we thought that on the front end, but our understanding is that you can actually apply for both. And we've been encouraging folks to apply for both. However, my understanding is that if you are approved for both programs, the funding has to be used for different purposes. In other words, if you are approved for the payroll program, you obviously want to use it for its intended purposes, which I would encourage you to do anyway, because it's supposed to be forgivable. And then the economic injury disaster loan can be used for additional expenses that you may have. Say if you have loans that you have to pay for equipment or things like that, or other expenses that maybe the paycheck protection loan does not cover. It also, if you do accept both programs or you're approved for both and you accept both and you get the $10,000 grant piece that comes with the economic injury disaster loan, you need to be mindful that will be deducted from whatever you calculate out on the PPP loan. So in other words, you know, if your loan comes out to be that you calculate it to be $50,000 for the Paycheck Protection Program, and you've also accepted or been approved for the economic injury disaster loan, and you get that $10,000 grant, that's going to be deducted off of your PPP loan, so you can't double dip it. Does that make sense?
Yeah, I think so.
You're saying double dip more so on the forgiveness aspect, correct? Because at the end of the day, it sounded like to me that they were going to fund what you needed on the forefront with the faster moving, or at least sounding like faster moving PPP program. And then if the EIDL was something that where you see extenuating circumstances lasting for a while, you know, they may not forgive the larger portion of that, and it may be subject to whatever other terms and interest rates that they deem fit, but that shorter term PPP piece of that puzzle would still be forgiven. Am I understanding that correctly?
That's right, Matt. Yeah, you're right.
Okay. And there was a good comment back here. I just want to make sure it doesn't get glanced over. I saw Stacy had a really good question. She asked if you could apply for the PPP loan and hold 75% of the money to pay your payroll once you reopen for business if you're closed down.
Ooh, that's a good question. I haven't been asked that one yet.
Yeah, I mean, I think that's the whole goal of this program is to, hey, let's rehire these people within the 8-week time frame, get them back on payroll, and kind of, you know, if you're, I would say that would be a good idea if you could, you know, rehire them back quickly within that 8-week time frame and start paying them again. Now, as far as, you know, maintaining the payroll on the, you know, and showing that, hey, you kept a consistent workers. I mean, we're thinking that might be maybe full-time equivalents. And so what if you have a bunch of part-time workers and you had, you know, 6 before this all happened, and then you hire 4 back? I mean, there's just still some issues to kind of work through on the back end of that, really revolving around full-time equivalents. But, you know, I think that's one of the goals of these programs is to get maybe some employees rehired And then there's probably some other kind of stipulations around that. Nick, is that kind of what you're thinking too? I guess he dropped off. His audio was kind of cutting in and out.
From what I had heard in some of the research that I had been doing, the payroll didn't have to be the same exact people.
Yeah, not the same exact people, but we'll use this term full-time equivalent. So let's just say you had somebody working 30 hours before that, before this, before we go into this economic downturn. They want to see you have, you retain that 30 hours. So something in the scheme of that,
Okay.
it doesn't have to necessarily be the same. So it's going to be by, let's just say full-time equivalent. So that hours part, and then also by the, total payroll amount as well. So a couple of different issues that, if you need help, calculating how many full-time equivalents you have because you have a lot of part-time workers, I would say get with a accountant or, a banker that really knows his stuff like Nick, that kind of help you at least document your files, and kind of prove and say, okay, at the beginning when I received this loan, I had, let's just put it in 1,500 hours of part-time people. You're going to have to, and I say have to, for the entire loan to be forgiven, it's anticipated that you maintain that 1,500 hours goal. But, like we've seen, it's also got to be a retention of those payroll dollars as well. So, I would say the stuff that we're doing now, our documentation files, they're going to be pretty thick. That stuff you submit to, Nick on the front end. So I guess just kind of get all that documentation up front and kind of knowing what goals you need to meet are probably going to be important as well. Nick, I think we lost you for a minute, man.
Sorry, my computer died and I had to charge it up. Man, I apologize. And
that's okay. Okay, I think we had another question of, what happens if we are shut down like the other states 4 to 6 weeks? Nick, have you encountered that at all?
We that hasn't been addressed yet to us, and honestly, it's a question mark that we would love to have an answer to, because let's just say we start processing these. The banks, and I think even you, Garrick, we're considered essential, so we would probably continue working in some capacity or another, whether it's remotely or having to go to the office and showing our documentation. But I don't know what it does if I don't know how they intend to utilize the stimulus if they've shut everything down and it's state mandated. So I don't know if that means that they would extend your 8-week period. I would venture to believe that it would make sense for them to, if you're not operating and doing what you're supposed to be able to and allowable to, because the point, I think right before I got booted off, the point of this is to stimulate your business to a point to where you can bring back employees if you have multiple employees, or at least get you back up and running to where it prevents you from having to close your doors. So I wish I had a better answer for you on that. But it is something that
Yeah, is that kind of where you were saying earlier that maybe you apply for both of that EIDL and the PPP, so that, if this thing does last, let's just say longer than 8 weeks, because the PPP is really designed for that 8-week kind of bridge loan to kind of get you through this and keep everybody employed. But if it lasts longer for that, is that maybe where you look at that EIDL and say, okay, that's kind of my backstop on this thing. because the SBA, I don't know how long it's going to take them to process that, EIDL and approve it. So that could be where that kind of comes into play. I mean, is that kind of what you're seeing on that?
Yeah, right. And that's kind of the discussions that we have. And when I was saying you have to kind of find the better fit for your company, because the truth of the matter is the PPP program is more built for short-term needs in the hope that it will be forgivable and you don't have to pay anything on it. That's the purpose intended for it, is to float you for the next couple months with the intent and hope that things are kind of back up and running and going smoothly. If you feel like you have a longer term need, or you feel like this could impact you beyond that, the EIDL might be a better fit for you, because you're going to wind up with debt either way. If you go with the EIDL, you're going to just have debt immediately. If you wind up with the PPP program and things kind of continue down the road, and you have a loan that's portion that's unforgivable, or for whatever reason pieces are not forgivable, when it gets to reach that point, you're going to be stuck with a loan anyway. So yeah, you're right, Eric. I mean, you got to find that balance or that preference of what works best for your business. And again, that's why I said I encourage you to get with your banker or your accountant and kind of find that balance of what works better for you, and looking over your budget and cash flow for the year. And I mean, this has obviously impacted a ton of people and a lot of people, but I know myself included, and a lot of good bankers here in the area are committed to try to help anybody and everybody that we can.
And Nick, we see these programs that are designed to get cash out quickly. Historically speaking, like let's just look back to the most recent kind of disaster we had, where these kind of programs were utilized. We could look back at Katrina maybe, and the stories that the penalties assessed on false representations to the government were pretty tremendous. I've heard some fines and penalties of false representations, or even if you unintentionally provide those numbers, you could really get on the because whenever they come around and they start looking at these files, they're gonna, if you even if you didn't know better, if you kind of misrepresented yourself, what's kind of the compliance cost to this whole thing? Are there going to be pretty significant penalties on the back end of this if you've kind of misrepresented yourself?
Yeah, there's definitely the potential for that. So in the fact sheet, which you can pull from you can go to treasury.gov, and it actually will give you about a 4 or 5 page summary of the program directly from the Treasury, and that there'll be a tab for this particular program. I think it says Paycheck Protection Program, and you can go in, click that tab, and then you scroll down about the middle of the page, and it'll have PDF files, and one of the main ones it says is for the borrower something other, and you can click on that PDF file, and it'll give you all the outlines, and specifically in there it states if funding is used for personal usage, or unintended purposes of this, you could be subject to some major penalties, and it says it pretty black and white. Same thing if you misrepresent your payroll or something like that, and I'll be honest, that's kind of where the liability falls on the banks, is because they're wanting us to review these, and that's why we ask for the information that we do to ensure that we help you calculate out. And I again encourage you to get with an accountant like Garrick, or somebody that can also help you with calculating your payroll accurately, so that you're not misrepresenting any of that. And because my understanding is if you misrepresent something, it's just going to be rolled into your unforgivable portion, and you're going to wind up having to pay a loan. And they have not even given us any indication whether the bank has to lend that money or term it out to you. So you may be stuck with that portion to the government at some point in time. But it's pretty black and white. It states if you use it for unintended purposes or things like that. We have many people that it also says in there you have to be negatively impacted by this. I think that from a personal opinion, it's hard to say because this has probably in some way or another impacted anybody and everybody. And I think you can classify that it has impacted you in some way, regardless if it's showing on your income statement immediately. It's probably going to in the next couple months show that it's impacted you. And some it shows it's impacted them immediately. But, you do have to attest to the fact that this has negatively impacted you. And, as a banker, my goal is to help those that this is negatively impacting immediately. And that in no way is saying that I'm playing favoritism by any means, but I think any banker would tell you our hope and goal is to help those that this has negatively impacted immediately and kind of go down the path and where your application goes based on that. So, and I don't know if SBA is going to look at that. They very well could. They may look at it and say they could deny it for all I know. They look at it and say that, well, I don't believe that this has negatively impacted XYZ business. We haven't been given any indication of that, but they very well could, because in order for the bank to release the funds, the SBA has to approve it, because that's who's going to pay the bank back eventually.
So, really, we could probably talk about all day about hypothetical situations, but does anybody have any kind of other questions that we could help answer?
The only other thing I didn't touch on, Nick, earlier that I have the answer to, but others may not, is any fees based around processing these documents or anything that may come out of their pocket or out of their funds as they proceed for these loans. And can you just touch base on that very briefly on how you guys are compensated and then where that comes from?
Sure. So there is no fees to the borrowers. Your bankers or whoever you're partnered with and working with, you should not be assessed any fees. Now, as Matt alluded to, obviously the banks would not agree to do this unless they receive some compensation for it, even if we're a profitable organization ourselves. So the government gets a processing fee and helping process these, but that is not put in the hands of the borrower. The borrower should not have to pay any fees.
Okay. And does the calculation include payroll expenses?
Yes, but you cannot include payroll taxes.
Okay.
There's a guide, and in the guide, you on the Treasury website that I said, it will kind of give you a breakdown of exactly what you can calculate to come on to get your loan amount on the PPP program. It's pretty easy to read, and it lays it out pretty straightforward.
I'm seeing it's also including health insurance premiums, retirement plan contributions also.
Yes, that's correct. Can include that as well.
And the PTO that they're earning. Not sure how the PTO would be calculated.
Vacation, included, correct.
I don't know that the PTO that they're earning counts just what they spend, correct? Or is that it is what they are earning?
Yeah, all your payroll's on a cash basis anyway. So I'd imagine that, if let's just say during that time period someone banked 20 hours but you didn't pay it out to them, I don't think that would qualify in this kind of instance, because it's not like actual cash dispersed. So in theory, you paid out to somebody else picks it up as income and pays taxes on it. If you're not actually paying that out, I don't know if that would qualify.
Well, Nick, hey, thank you so much for your time this evening to sit down and go through this nitty gritty and answer some questions here. Super appreciate it, Garrick. As always, appreciate you and your helping hand and willingness to do this and put this on. Matt Brooks, thanks for organizing everything. Guys, I hope this was largely helpful for everyone in here. And if you guys need, we did record this video, so we will post it. So if you need to go back and review segments. Also, if you need to get in touch with Garrick or in touch with Nick for help with processing these, guys, can you give them some contact information?
Yeah, I'll be happy to.
Go ahead, Nick.
My phone number is 256-313-3638, or my email is nrockhill@myprogressbank.com.
Yeah, guys, and y'all can get a hold of me. My phone number is 256-658-7554. Email is gsams, SAMS, @bmss.com. Also, we on our website, bmss.com, we've got an active COVID-19 response. So a lot of these, we've done several webinars, we've done studies, certain things. There's going to be a lot of guidance out there on that site that you can go and access for free. It'll answer a lot of your questions. You can go through and see. We didn't talk about many of the tax-related kind of consequences and circumstances of this, but you can also go out there and see detail on that. But yeah, I mean, just reach out to Nick or I. We both strongly support the community, and that's kind of why we do that. So, Nick, I appreciate your time, man. I kind of got you last minute on this, and I know you're doing a lot of these. So, if y'all have any other questions, Matt posted the emails in the chat, so feel free to shoot us an email. Nick may be a little bit busy tomorrow with this thing opening up, but I'm sure he'll holler at you when he can.
No, I mean, Garrick, thank you, and hopefully this was helpful. Again, I encourage you to go to sba.gov, treasury.gov, and gather some of the materials and things that I've alluded to today. They've made it very resourceful and easy to navigate through. But I'm happy to answer any questions. If you need to reach out to me, I'll get back to you as soon as I can. If I don't answer your phone calls or you email me, I'll try to get back to you as soon as possible. But hopefully it was helpful. And Matt, I appreciate you putting this together, and Garrick, you inviting me over.
All right, guys. Thank you.
Thank you.
Thanks, guys.